Well, China is not the only one. Every country in the world has 5, sometimes 10, sometimes 20-year low CPI. What we have is a global disinflationary wave that has been with us basically for the last 7 or 8 years. So it's not anything new. What we are seeing right now is 36 months in a row of negative PPI in China. That means China had a deflation for the last 3 years. But if you look at Korea, Korea had negative PPI for 2 years. Eurozone had a negative PPI for almost a year now. So it's nothing unusual. There is too much capacity globally. And as you have too much capacity, you have very strong negative prices. How do you react to it? Well, there is only 2 reactions. You close down surplus capacity, which is very painful. It creates unemployment. It creates friction. Or you loosen up your monetary policy. Loosening up monetary policy might not help. But on the other hand, it's probably a better choice, at least in the short term, than shutting down plants. Well, it's the obvious ones. Reserve requirements are too high, interest rates are too high, loan-to-deposit ratios are too low. So it's an obvious thing. And I think everybody is expecting that People's Bank of China is going to do that. They also need to export more of that deflation to other countries, causing a greater problem elsewhere on a global basis. And that should require a lower currency on top of that.